And good morning, good evening, good afternoon, students and traders and analysts. This is Mike, the FX boss, broadcasting you live on YouTube and other streaming platforms. And this is the professional Forex trading course. As always, remember, I'm trying to bring you from zero to a potentially millionaire trader in 3 years, on average in an institutional way. So today we are going to talk about the different market behaviors, but before we go to the behaviors, we need to... So yesterday we've learned, lesson number 2, we've learned about highs and lows, and we've learned about how to confirm a trend, alright? Now, the next essential thing to learn is that if this is an uptrend, higher highs, higher lows, higher highs, higher lows, and when something like this happens, alright, here is the question: is this a downtrend? What do you think? So yesterday we've learned about highs and lows, and we've learned the rules about how to confirm the trend, and the rule is stating that to confirm an uptrend we need a minimum 2 lows and 2 highs, when the second high it's a higher high and the second low it's a lower low. Remember? Alright, very good. And then we said, alright, to confirm a downtrend we need a minimum of minimum of 2 lows and 2 highs, where the second low it's a lower low and the second high it's a lower high. Remember? Those are the rules. Okay? But yesterday at the end of the lesson I've told you that this was yesterday, not to get too complicated, we are going to learn that not all highs and lows are relevant. So now here is the question: the market, the price action moves like this, easy to spot, easy to understand, nothing special. But then the market is going to make 2 lower lows and lower highs. Now here is the question: is this a downtrend? Is this a downtrend? Now some of you are going to say yes, because you told me that in order to confirm a downtrend you have minimum 2 lows and 2 highs, and the second low it's a lower low and the second high it's a lower high. Some of you, maybe more advanced, you're going to say, well, this is kind of a downtrend, but really not. Okay, so now what is what, right? What is what? Okay, and here is the answer. Rule. Alright, rule. Well, it's really more of a concept, okay? It's a concept. Charting concept. Alright? Relevant highs and lows are the borderlines between extensions and retracements. Okay, what does this mean? Before we go and talk about the market wave, which is one of the most important concepts in trading and charting and understanding this market and timing, we need to learn that the market, in order to move, it must wave. So in an uptrend the market is going to extend, then it's going to retrace, then it's going to extend, then it's going to retrace, and then it's going to extend. This is how the market moves. Alright? This is the only certainty that you have in the financial markets, is that the market, in order to move, it must wave. Okay? And this is good news and bad news, What is the good news? So if you might be losing in a position on a demo account, if you're smart, if you might be losing, you know, in a position like in here, you know, well, this market, if this is the retracement, this market must extend. It's an absolute must. It must goes into the next extension. We're going to check, you're going to see this on the charts, right? But so far theory, I wanted to understand that when you see something like this would be the example. Straight line, straight line, straight line, straight line, straight line. And then you have two lower lows, two lower highs. Those circle highs, I mean the first one is still, this is still a rectangle, this is still relevant. This is still a relevant low. This is still a relevant high. Alright, if TradingView is going to allow me to do, okay, very good. But then the smaller ones, you know, we call these there is going to be a lot of vocabulary to learn if you're a beginner trader, you know. Anyway, the sub swings or the mini swings, you know, or the mini highs or the mini lows, you know, those are not relevant. Why not? Because relevant highs and lows are the borderlines between the extensions and retracements. I need you to learn this concept, and I need you to learn this concept like you can see it on the chart. If you don't learn this concept well, then it's going to get more and more and more challenging, and you might be entering where you should not enter. You might be buying when you should not buy an asset, a currency pair. You might be shorting or selling a currency pair you might not, where you shouldn't be short. Like in this example in here. Just an example. Okay? So hopefully this is not too difficult to understand. Relevant highs and lows are the borderlines between extensions and retracements. So if we can understand that rectangle low high to low high and connecting the dots, you see an uptrend, right? We're going to learn about trend lines, and you have an uptrend line that confirms the trend. Then hopefully we can understand that these lower lows, lower highs, this is not really a downtrend. Oh, but you told me that highs and lows. Time out. You know, we are trying to upgrade the knowledge in understanding. Okay? So, on this scale, alright, on this scale, on this time frame that you're looking at right now, this is not a down. I mean, you can call it downtrend, but it's a retracement on the uptrend. Boss, can you repeat, please? This, if I put another circle inside the rectangle, if it's going to allow me. So these lower lows, lower highs, you can call it downtrend, but it's really not. Alright? This is a retracement on the uptrend. And if you might thinking, oh, you know, this is confusing, or how do you know? It's not. Look at the rectangles. Isn't it making higher highs, higher lows, higher highs, higher lows, higher highs? And you might say, yes, it's doing this. So why are the circles, highs and lows, not relevant? Because the price action, the driving force, the pattern is the connection of the rectangles. Because the relevant highs and lows are the borderlines between extension and retracements. Now, how to spot this one? If this would be the daily chart, if you would go on the 2-hour chart or 1-hour chart or 4-hour chart, you would see in an up extension market making higher highs, higher lows. And in a retracement you would see lower lows, lower highs. And in an extension you would see again, you would see higher highs, higher lows. Can you see it, everybody? And in the next retracement it would make lower lows, lower highs. Can you see it? The blue or the circle are the not relevant highs and lows. The rectangles are, because the relevant highs and lows are the borderlines between the extensions and retracements. I need you to learn this concept with the understanding when we go on the chart. Okay? Now, so what happens if you believe that this is a downtrend? You know, somebody's going to short, and again, we didn't learn yet, but somebody's going to short at the worst possible place called past support, you know, and because the market, in order to move, it must wave. The retracement sooner or later is going to be over and is going to start the new extension leg. See where you were shorting the market, see where you were selling the market, see? At the worst possible time. Alright, it's not personal, this is all about learning and understanding how this market works. This is a skill to spatially understand how this market works and what is what. So if I short the market here, you know, I have an 80% chance of this trade being a loser, or a 90% chance being a loser. Again, boss, how do you know? Because I am shorting an uptrend. Relevant highs and lows are up, I can connect the dots, I can see clearly an uptrend. I even have an uptrend line confirming that I'm in an uptrend, and I'm shorting the market in here, near the uptrend line, which is, you know, for the future lessons, near the uptrend line and at past support. This is the worst possible place for me to short the market, for me to sell. With the understanding that not all highs and lows are relevant. Now I can improve my trading. You're not a trader yet, you're still an analyst, but you can improve, you know, the understanding on what is what, where the market most likely is going to reverse, where most likely the market is going to go up again in an uptrend, where most likely the market, you know, there is a high chance of the market to stop extending and start reversing, and so on and so on and so on. Alright? Now the same goes for the downtrend. You know, you have lower lows, lower highs, lower lows, and then you see something like this, you know, and you would think, oh, I'm in an uptrend, and you're going to buy this counter trend line break in here, which we're going to learn, you know, and again, you are going long against the downtrend that you can clearly see. Why? Because you are buying a retracement on the downtrend. Okay? Your brain, or you believe that you're buying an uptrend, which is really not. It's a retracement on the downtrend. One more time, how can you spot what is what? With the understanding of relevant highs and lows. Relevant highs and lows are borderlines between extensions and retracements. Alright? I needed to learn this before we start to talk about the market wave, also called market structure. Alright? If it's too much information or a lot of information, download the video from YouTube, rewatch it a few times, send me an email if you need to. Okay? Just remember that the market, in order to move, it must wave. It must go from extension, down extension, into retracement, down extension, into retracement. Okay? So before we talk about the different market behaviors, okay, now we are on AUD monthly chart. Okay? And on the monthly chart, starting from the monthly band, alright, I'm just going to connect, you know, high to low to high, to high to low to high, to high to low, low to high. See, I'm connecting all highs and lows. Remember, yesterday we've learned also that a trend is a sequence, so this is This is not a low, so that's the low, that's the high, that's not a low, that's the low, that's the high, that's the low, that's the high. Alright, and if I move forward, connecting all highs and lows, low to high, low to high, high to low, low to high, high to low, low to high. This is a low, but that's not a high, so high to low, low to high, high to not a low, low to high, high to low, low to high. Alright? Now what I've done, I've connected all highs and lows. The trend, it's not this one, the trend is, it's going to take some time, alright? But if the rule, the concept states that the relevant highs and lows are borderlines between extensions and retracements, I believe this is the lower low, you know, and this would be the highest high then, and this would be the lower low, then of course it's easy for me now to see and to teach you, you know, because everything is on the chart, fair enough. But now if I connect, you know, oh, high to low, low to high, high to low, now this would be the downtrend. Because from high to low the market was making, you know, it's sometimes it's messy of course, but nonetheless it was making lower lows, lower highs. And then from this low to this high it was making higher highs, higher lows. There are easier currency pair to spot this one, okay? And now from this high to this low, easier to see, do we agree that the market is making lower lows, lower highs, lower lows, lower highs? Okay? So, talking about trading, you're still an analyst and making money. If you went up in here, if you were trying to buy, it doesn't really matter, you know, some of you are advanced, it doesn't really matter if you're a day trader, scalper or swing trader, in this that it's easy to see, easy to spot. If you were buying, you went against the big guy, which is called the general trend on the monthly chart. Alright? You could win, you could lose, anyway you are positioned against the price action, you went against the trend, and when we are going against the trend, we are lowering our probability of success. Does this make sense? I believe, I mean this is common sense, right? So another one to easily spot and understand, it's NZD CAD, alright? And if you go on NZD CAD on the weekly chart, just for you to see, alright? And starting from the monthly bands, you know, I'm going to connect high to low, low to high, high to low, low to high, high to low, low to high, high to low, lower low, low to high, high to low. Okay. Now if I go from the weekly chart to the daily chart, I should see, let's see if the boss not know what he's talking about. I should see in a down extension market making lower lows, lower highs, and I should see in a retracement market making higher highs, higher lows. Agreed? For me to, come on trading view, for me to understand what are relevant highs and lows, I need to train myself as a good analyst, not a trader yet. I need to train myself spatially to see and understand when it's the time to go long or buy and when it's time to go short or sell, to have a greater chance of success. Alright, now I'm on the weekly chart. Let's see the daily. Let's see if the boss knows what he's talking about. So I'm going to delete this one and I'm going to delete this one. Alright. Now the market not always is going to be that beautiful, you know, but so from this relevant high to this relevant low, alright, wasn't, I mean, the market can do anything it wants, right? But nonetheless, wasn't the market making lower lows, lower highs, and went back up, but still making lower lows, lower highs? Can you see it until here? And then the market start making, in a down retracement, start making higher highs, higher lows. Can you see it? The change in the short-term trend. Then when the market pushed to the next extension, can you see that making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, until down to here, red color for the to go down, and then the market stopped making lower lows, lower highs, and start the retracement again, start making higher highs, higher lows. Can you see it? NZDCAD, it's one of the easiest pairs to study the charts if you want. Okay? I need you to learn this concept if you want to improve, and if not, it's going to get more and more and more complex. Alright? Now this concept applies to basically everything that you're learning here, applies to all time frames. Okay? We are doing this on the daily chart because it's not moving fast and it's slow, and weekly and the monthly. The same goes for the 4-hour chart, the 2-hour chart, the 1-minute chart. The market, in order to move, it must wave. And the relevant highs and lows on NZDCAD daily chart are those ones which are the representation, and you can see it, you know, with the naked eye, like, alright, you know, this is the relevant low, because I can clearly see that the market was making lower lows, lower highs, but then in some point in time stopped making lower lows, lower highs, and changed direction, start making higher highs, higher lows. So the market went from a down extension back to a retracement. And again, you know, this is the game. The game goes on and on and on. It's always the same. It goes up to here, you know, it stopped the retracement and pushed down to the next extension, making lower lows, lower highs. Then it stopped in some point of time, because this is how this market works, and it must go into retracement too. Alright? So for the future lessons, end of extensions, the more the market is extending, the riskier it becomes for you to make money or to trade on the demo account if you are smart first. You know why? Because you know that the market must retrace. And when you're measuring the extension and you're measuring the retracement, the deeper the retracement, and you're buying on the 1-hour chart, you're buying on the 2-hour chart, you're buying on the 15-minute chart, the deeper the retracement, again, the riskier it becomes. Why? Because you know that the next extension must come. And all of this, what we talked about so far, it's called the understanding of probabilities. Okay, download the video, watch it a few times, go on different charts, go on different currency pairs, go on different time frames, okay, and try to understand. That's on you, and try to understand and chart relevant highs and lows. Start with the monthly, which is the easiest, you know, then you go to the weekly, which is still easy, then you go to the daily, which is a little bit more challenging, right? And nonetheless you go to the 4-hour chart, 2-hour chart, 1-hour chart. Okay, now I'm going to tell you something, you are not going to like it, or you might not like it, but it's the truth. This skill, if you do every day a little bit, is going to take you a few months to master. Alright? Don't be so naive thinking that, oh, I'm going to do this for one day and I'm going to chart for one day and I know everything, you know? Repetition is how we learn, and most of the 27 currency pairs, all of them are different. Every specific time frame has its own trends. Alright, so be aware that every currency pair and every time frame, when you change from 2-hour chart to the 4-hour chart, the trend is not going to be the same. Sometimes the monthly and the weekly, the big time frames, they overlap, alright. But when we talk about daily, 4-hour, 2-hour, 1 hour, 15 minutes, every single time frame has its own trends, has its own relevant highs and lows. So pay attention not to mix apples with bananas, because you might be entering again, you know, this is why this is happening, right? Give me a second. And so if I go on the monthly chart again, there you go. This is why this is happening, because, you know, you are seeing this on the 1-hour chart, you know, and you are shortening it, right? And you are shortening because you believe it's a downtrend on the 1-hour chart example, but from the daily chart, you know, what you're really shorting, it's a retracement of the uptrend. This is why I'm telling you, pay attention not to mix apples with bananas, and to get aware and to practice different currency pairs, different time frames. One more time, start with the monthly. You know, it's big, it's slow, it's just a few highs and lows. Then go to the weekly, it's more highs and lows. Move to the daily, it's even more highs and lows. You know, and then if you want the Ferrari, you know, in a few years' time, you know, then you go and practice on the 4-hour chart, 2-hour chart, 1-hour chart, whatever, alright? Okay, changing subjects. That being said, let's talk about the tradable market behavior. Hopefully my English is correct. Tradable market behaviors and come on, trading view, and non-tradable market behaviors. Okay, why is this important? For you not to waste time. Alright, tradable market behaviors, you know it already. Tradable market behavior number 1, easy to spot, easy to make some pips, some money on the demo account if you are smart first, you know. Then you have a downtrend when the market's making lower lows, lower highs. You know, we didn't learn yet how to properly draw trend lines, but you can confirm the uptrend and the downtrend with trend lines. Lastly, we have consolidation or sideways movement or channel, you know, different vocabulary talking about the same thing. When you have more or less equal highs and you have more or less equal lows. Alright, those are the 3 easy to spot, easy to understand, easy to see, easy to trade market behaviors. Alright, for the beginner traders, of course. Now, the non-tradable, okay, where I'm telling you, don't waste time, you know, this is one, so it's going to make lower highs, but it's going to make also higher lows, alright? And this is not even the problematic one. Okay, so if you're a complete beginner, don't waste time trading or trying to make money here. You know, go with the uptrend, downtrend, consolidation maybe. Okay, it's called flag, pennant, whatever might be the case. Alright, and this is not even the problematic. The non-tradable market behavior that even professional traders lose. Alright, and if somebody says it's not true, you know, call him out, go to Mike's channel and go online with Mike, you know, because he's lying. And I'm going to explain to you why. You know, the non-tradable market behavior where professional traders lose too, it's the market behavior that is going to make a higher high, but then is going to make a lower low. Higher high, lower low. Higher high, lower low. This market behavior, this pattern, it's called chaos. Alright? And I'm going to explain to you why even professional traders lose. I mean, talking about winning, alright, if you are lucky, you get lucky, you know. Now, it's easy to understand an uptrend, you know, and where would you put the stop loss, you know? You would put the stop loss in an uptrend, you know, below the most recent low, you know, talking about the stop loss, about consolidation, the stop loss goes above or below the consolidation lines, and in a downtrend you would put the stop loss above the most recent high, just an example, okay? Now, when chaos happens, how are you going to play this one? Alright? So, let's say that this is what you see, alright? You're seeing a lower low, and somewhere in between, the market is going to make something like this, and you are going to short the market, alright? And you are going to put the stop loss somewhere up in here. Above the most recent high, and the market is going to go up, bam, and is going to stop you out. And you're going to say to yourself, well, not a big deal, you know, no brainer, you know. So okay, so right, I'm not in a downtrend, I'm in an uptrend, right? Because it made a higher high, and somewhere during down the line, the market is going to make higher highs, higher lows, whatever. You are going to buy the market thinking that you are in an uptrend. You are going to put the stop loss below the most recent low, example, you know, and bam, the market is going to stop you again. Fair enough? Alright? I'm not going to ask you, do you agree with me? I'm going to ask you a slightly different question. Does this make sense to you? Short stops are not going to help you in here too. And then for the third time you're going to say, all right, you know, looks like the market is playing around now. It made another lower low, so I'm going to short the market. So somewhere in between is going to make lower lows, lower highs on the smaller time frames. You're going to short the market again, and you're going to say, well, stop loss up in here, I mean, there is no chance that the market goes up to this level and stop me out. And bam, and so on and so on and so on. Can you see the logic, everybody? You cannot win trading inside chaos. I don't care what strategy you are using, if you are advanced or intermediate. I don't care what methodology you are using, you know, I don't care what. If you are trading or analyzing or whatever, having fun in between, you cannot win in chaos. Alright? Doesn't matter Fibonacci, Ichimoku, system, strategy, whatever, you know, the golden unicorns and rainbows strategy, you know, from shaky trades, TikTok, YouTube channels, you are going to lose in here. And again, you know, the question is not, do you agree with me? No, but I mean, does this make sense to you? Every single time that you put your stop loss on something that makes sense, which would be the relevant high or the relevant low, the market is going to stop you out every single time. Alright? That being said, let's go on the chart. Now let's go on Euro. Let's go to Canada JPY, still moving up, right? And let's go on the 4-hour chart. 4-hour chart maybe. Oh, AUD/USD was the last time, was chaotic, was chaos, right? Give me a second, trying to find the chaos pattern. And so consolidation, it's not that difficult, right? You would say, okay, I'm going to train myself to spatially see, all right, here the market's making, you know, more or less equal highs, equal lows, you know, spotting the uptrend, you know, it's not a big deal, but chaos, you know, higher highs and then lower lows. Give me a second. Maybe this one would be the case, or if I go on the weekly chart, maybe sometimes, oh, there you go, it was on the weekly chart last time, AUD/USD. So here, this was, then it went out of the pattern. So in here now, this, what you can see right now, everybody, it's chaos. Alright? This is where you, if you don't identify soon enough, and in the Forex course too, the advanced institutional trader course, you are going to learn strategies, how to identify faster the rules, how to protect yourself, alright? But Forex course 101, just for you to understand that in here, most of you, you know, if you lose, pat yourself on the back, you know, it's quite difficult to predict, oh my gosh, it's making higher highs, but then it's going to make, so what would you do down in here? You would short the market, right? You would short the market, whatever might be the case, you know, on the 1-hour chart, 2-hour chart, 15-minute chart. This is the weekly. When the weekly start pushing down, making bearish candles, you would short the market, wouldn't you? Good. What would happen next? Bam! You would be stopped out. And then you would say, all right, now, so I'm going to buy, right? And it doesn't really matter where you would buy. What would happen next? Bam! Stopped out again. So this is the graphical representation of chaos. This is where professional traders lose too, alright? Because every single time you put a stop loss somewhere, the market is going to stop you out and reverse. And then you're going to short the market, and the market is going to stop you out and reverse. Alright? So, homework, if you want to grow faster in understanding and if you want to get the skill faster, try to find, so now this is the second homework. Homework number 1 was try to identify relevant highs and lows, AUD/USD 2-hour chart. The next homework would be try to find different market behaviors, try to identify different market behaviors and try to think about, alright, how would I trade this one, right? Now again, consolidation is easy to spot, right? Consolidation, give me a second. Consolidation is in here and is in here, you know, then it's a downtrend. Do we have a chaos pattern? So here maybe, you know, from here to here on the 2-hour chart and here to here. You know, if you would trade the 15-minute chart, you would lose in here, pat yourself on the back, you know, and chaos pattern maybe. Let's see. Well, it's in an uptrend, downtrend. It's alright. It's alright. Okay, everybody. This is all for today. Never forget, trading is a learnable skill. Send me an email if you want to receive the free manual. And never forget, it's going to take some time. Making money in the forex market, it's not easy. you are going to lose money. Don't fool yourself, you are not going to be rich in no Ferrari in the first year for you. But if you learn well, and especially in the institution, when you learn how institutional traders make money, with the understanding that if you're a retail trader, that this business is not what you really think, you know, this business has nothing to do with, it's too soon, but okay, let me throw you a bomb, right? And I shouldn't say this one on YouTube anyway. You know, this business in the last instance has nothing to do with charts. Forex course 202 conversation, the institutional trader conversation. This business in the last instance has nothing to do with charts and strategies, and has everything to do with next year. All the secrets are going to be revealed to you next year. You know, how this business is done, what tools institutions are using to make money. Alright everybody, so see you back tomorrow. Thank you for your time. Train well, practice well, download the video, watch it a few times. Please send me questions. Alright? And see you tomorrow with another lesson. This is Mike. See you tomorrow. Bye bye. Thank you very much.